Here we're going to take a look at who is required to file a tax return. Not everyone is. And also its standard deductions. Based on the filing status and the gross income, most people are going to take a look at Chart A. This is found in your 1040 instruction booklet. It is also found in your tax book. Generally, even if you didn't have Chart A in front of you, if the exemptions for that taxpayer and that year, plus the greater of the standard or itemized deductions for that taxpayer for that year, if you add those two things together and they're more than that person's income, then filing is not necessary for that person. Now there's also two other charts besides Chart A. There's Chart B is for if the taxpayer is a dependent of somebody else. So if you're a student, you're living with your parents, and your parents are claiming you on their return, but you still earn some money, you still have to file a tax return. You just don't get to claim your exemption because your parents are claiming it. But you still might have to file a tax return. So these are separate rules for if you are dependent on someone else's return. And basically, these are in Chart B, and they're the greater of $1,050 or earned income plus $350, but never more than the standard deduction. So the easy way to do this is just to write down $1,050, write down whatever their earned income, remember that's what they sweat for, like wages and self-employment. Write down their earned income and add $350 to it, and write down the standard deduction for that year, which is $6,300 for 2015. Then you're going to put them in order from the lowest number to the highest number and circle the middle number. That is, if they have more income than that middle number, they have to file a return. If they have less than that middle number, then they do not have to file a return. Now remember, just because they don't have to file a return doesn't mean they might not want to. If they were a student working at McDonald's and only earned a few $1,000s, and maybe they're not required to file, but if McDonald's took taxes out of their check, they would want to file so that they could get a refund of those monies. So here is an example, couple of examples. The first one, Jamie is 23 and a full-time student, and her parents claim her. She earns $2,000. How much is her standard deduction? We're going to write down $1,050, and she's single, so that her normal standard deduction from Chart A, if she were just a Chart A person, would be $6,300. And then we're going to take her earned income, which was $2,000, add $350 to it. So now we have three numbers, $1,050, $2,350, and $6,300. We put them in order from lowest to highest, which in this case they're already in that order. And so $2,350 is the middle number. We circle that. That is her standard deduction. It also determines whether or not she has to file. So she only has $2,000 of income that's less than $2,350, so she would not have to file it if she didn't want to. The second example, Tia is 18. She has dividend income of $1,500. Remember, dividends are unearned income. And her parents claim her. What is her standard deduction? Well, now we're going to write down $1,050. We're going to write down the $6,300. Now we have to take her earned income, and she didn't have any earned income, so that's zero. And we're going to add $350 to it. Now we're going to put those three numbers in order from lowest to highest. So now the $350 is on the lowest, then the 1050, and then the 6300. We circle the middle number, which is 1050. That becomes her standard deduction, and we also take a look and say, did she make more money than 1050? If so, she has to file. She did. She made $1,500 of income, so Tia has to file a tax return. There is also a third chart, Chart C, and this deals with special situations. One of the most important ones for our class is if the taxpayer had self-employment income. If they were an independent contractor or had their own business and they made at least $400, bottom line $400 in that business, then they are required to file a tax return. They won't owe any regular tax if their self-employment income is real low, but they will owe Social Security and Medicare tax. These taxes come if you work for an employer. The employer is taking these taxes out of your check every week, sending them to the IRS. Then when you retire later on in life, you would get Social Security benefits and Medicare benefits. And you're paying for those all along during your life as you work. Now, if you have your own business, no one is taking that money out of you. You have to send quarterly estimates and in the to see if you have to file a return. If you had more than $400 of self-employment income, you would still have to pay that Social Security and Medicare. There's other special situations. If you work as a waiter or waitress and you do not report your tips to your employer, then those have to be, that allows you to have to fill out a tax return. Also, even if you had very low income, still you would have to file a return because once again you have to pay Social Security and Medicare on those tips. Here's an example of a self-employed person. You have to analyze each independent situation to determine if the taxpayer is required to file. Here is Miles. He's 45 years old. He's a single waiter, and he has unreported tips of $15.10. Is he required to file? Yes, because Chart C says that he owes Social Security taxes on those unreported tips, even though he probably won't owe any regular taxes. Simone is single. She's 31 years old. She's blind. She has income of $10,370. Is she required to file? So let's first take a look at calculating this without the use of the charts. We're going to figure out her standard deduction and we're going to figure out her exemptions. We're going to add those together and see if she makes more than that amount. Her standard deduction is $78.50. How did we get that? That's $6,300 plus $1,550 for being blind. Her exemption is $4,000. She has one exemption. I'm going to add the $78.50 and the $4,000 together. That's $11,850. She only made $10,370, so she is not required to file. Let's take a look at the same situation, only we're going to use the chart. So if you look at the 2015 Chart A, because she's not a dependent of someone else, so we don't need Chart B, and doesn't have tips or is self-employed, so we don't need Chart C. So we're going to just look at Chart A. And Chart A has 3 columns. In the first column we're going to find that she's single, so we're going to go on that row for the single. And then we have to see on the second column, is she over or under 65? Well, she is under 65, so we're going to go across to that row to the third column, which says $10,300. However, we also need to add the extra standard deduction for blind, which is $1,550, and then we get $11,850. She made less than that, so she is not required to file. For blind, if you want to use the under and over 65, so we could have used the row that said she was over 65 in place of her being blind. Now, what if she was not blind? Then what happens? Well, in chart A, we would still look under single, second column under 65. We go across and that says 10,300. Now we're not adding anything extra because of her being blind, and so 10,300 is the amount. In this case, she made more than 10,300. She made 10,370, so she is required to file a tax return. Let's look at another example. Eamon and his wife, Rosen, and they are both over age 65. They have income of $19,980, and they file jointly. Are they required to file? Let's first look at it by calculating it out ourselves without the chart. Their standard deduction is $15,100, which is $12,600 for the regular standard deduction for married filing jointly. We're going to add $1,250 for Eamon being over 65 and $1,250 for Rosen being over 65. Their exemption is $8,000. They have two exemptions, $4,000 apiece. Now I'm going to add up the $15,100 standard deduction plus the $8,000 exemption. That equals $23,100. They have less than $23,100 of income, and so they are not required to file. Now let's take a look at the same example, only using the chart. So here we're going to go in the first column of chart A to where we see married filing jointly. And we're going to go over to the second column, and there's 3 rows there. One for if neither spouse is 65 or older, one if one of the spouses is 65 or older, and one if both of the spouses are 65 or older. In this case, both spouses are 65 or older. So we're going to choose that row, and we're going to go over to the third column, and we're going to see 23,100. They do not have to file because their income of $19,980 is less than the $23,100.